Hello friends, today I am going to discuss about insurance. What is insurance and how insurance is used by the individuals as well as business people. First of all, insurance is an agreement or a contract between two parties where insurer as well as insured will be the two parties who will make an arrangement to manage the loss or the future possible losses. It may be physical loss or financial losses to manage and effectively without any unexpected events. So when we consider insurance, it's better to discuss with the one by one, like individual loss as well as the company loss or business entity losses. Let me come to individual losses. See, today in this particular technology era, people are running like anything. They are struggling to earn money, to earn reputation and everything. But in this juncture, many people will be lost somewhere, where people were at the time of earning money or at the time of earning or generating revenue for their family or for the personal expenses, they will lose somewhere, or else they may met with an accidents or unexpected events. It may lead to death, or it may lead to accidents or injuries, or it may anything like diseases also. So in this background, what happened in the sense, when only one individual is earning bread or the livelihood for the family, if something happened to that individual, so there will be no further income for the family, and that family may come to road. There will be no a source of income. So this is one element. But in the absence of a breadwinner, it may also we can see another event, that is that family may lose their available or existing assets also. Some families do not have sufficient assets or revenue to even to manage the cremation expenses. Okay, in that matter, certain families will even sell their jewelries and small portion of properties also. In this background, insurance can act as a effective tool to manage such kind of unexpected events, unexpected financial losses. Another way, let me come to the business entities. See, today business entities are run for the purpose of profit. Is there any chance for business income loss? Definitely, due to unexpected events where the machineries break down or strikes or any other matter. It may be political events or it may be political meltdown, whatever it may be, the income of the company may be lost. Another way, we can look into the another aspect, that is theft, burglary, strike, riots. In that matter also, business may lose their income. In that matter, how to manage that loss of income or how to manage the loss of property. So in that matter also, insurance can help the business entities. So let me see what is insurance. Insurance is an agreement between two parties where insurer and insured, and insurer will make a promise to make the bad things good, or else provide the compensation in the future date on a specified event which is unpredictable. Okay, fine. Anyway, so now how insurance works? So insurer will make a promise. That's what insurance is, an intangible product. It's not a tangible product. We cannot touch, we can see. So in that matter, just a promise made by the insurer to compensate the insurer in the future date. For what? See, definitely insurance is not an NGO, it's not a trust, it's not run by an individual for the non-profit basis, it is run for the profit basis. I told you people, insurance and agreement. If agreement must be completed, there must be consideration. So whatever the promise made by the insurer to compensate the insured in future date, it will be made against the consideration called fee or else premium. So in this background, okay, today if you look into any organizations, today every organization will look into consider taking insurance for the property, taking insurance for business income loss, taking insurance for the employees. It is one angle, it will create employee loyalty for the organization. If insurance is given to the employees, it will create loyalty, they will work hard for the society as well as organization. Another thing is, insurance is not only risk factor element or risk prevention factor or risk minimization factor. So sometimes, some extent, risk cannot be eliminated, risk cannot be avoided, but it can be transferred. This insurance is a mechanism where few persons misfortune can be transferred to the many people who are also exposed to similar risk. Okay, got it. So in this background, insurance will help the organization to minimize the possible risk which may arise due to the accidents or any other unexpected events. Let me come to the one factor. Another factor, today insurance is not just seen as a factor of risk management or the technique of risk management, but also we can consider insurance as a works as a banker, where it provides the savings benefit. Another thing is, so you can save money regularly, you pay premium in different intervals. That's more, it may be monthly, quarterly, half yearly or yearly. That's one thing, savings element. Today there are many people who divert their hard-earned money to insurance sector by considering as a insurance as a investment. Also is one possible way where insurance will give very specified or guaranteed return on your investment. Okay, got it. So in this background, so savings element will be there will be investment element will be there. Another, if you compare with the insurance and with the other investment avenues, that is maybe investment in real estate, investment in banks, investment in shares or any other matters. Okay, got it. I feel insurance is more secured one, where I'll give an example here. See, I invest in money in insurance, 10,000 rupees will be invested in insurance, as well as another 10,000 will be invested in banks. Let me compare here. If I invest in banks around 10,000 rupees, I will, if a X person, I will die, or else myself will not be there tomorrow, or else I will expire. In that matter, so my family will get 10,000 hardly, whatever money invested in the banks, so I will earn. That's it. If I invest in stock exchange, whatever money invested in the market, okay, that will be available for the family. Sometimes it may not be, because whatever the money invested in stock exchanges will act upon the market condition, so that I may get 10,000 or my family may get 10,000 or may not, okay, lesser than that. Okay, I invest in real estate, so depends, it's purely based on the market, so real estate may go up or may come down. So in this matter, whatever money invested may not ensure you the guaranteed return. But if you consider insurance, if I invest 10,000 today, if something happens to me, my family will get total sum assured 1 lakh rupees. Okay, got it. So if I invest 10,000 rupees, my family is guaranteed for 1 lakh rupees return. So when I compare with the insurance and the other investment avenues, insurance is going to be more secured, which will give more guaranteed return for the beneficiaries. Okay, got it. Next, let me come to the factor called principles. Okay, so there are many principles. Insurance will not work like a general contract. Insurance work in a different aspect, or it will follow different principles. There are many principles to be considered, like utmost good faith, another principle called insurable interest, another principle called principle of indemnity, another principle called proximate cause. Okay, minor. These are the certain principle to be considered while considering dealing with the insurance concept. Let me come to principle of utmost good faith. So why I consider principle of utmost good faith is different, or insurance is different from other commercial transactions. But when come to insurance contract, insurer as well as insured must show ultimate faith while executing the contract. But if I consider any other agreements or contract, if I go to shop, I want to purchase one electronic instrument, I go to shop and I'll purchase one element, I look into that, I'll take a few more items and compare with that, I'll see the sample, then I will also ask with the shopkeeper, give the demo, and after coming home, I will experience that it is not working, or else that is not the expected item. So what to do? So I'll go to the shopkeeper and ask, so that shopkeeper will say, no, you have already tested it, so I cannot replace you. So here with concern to that, the ultimate faith should be there both the side, but there is no obligation for the shopkeeper to disclose each and every information. But when come to insurance, here seller is having no much obligation, but the proposer is having much more obligation to disclose the information, where other general contract, seller is having more obligation to disclose the information, but when it comes to insurance contract, buyer is having much more obligation, or he should disclose more truth information to the seller or the insurance company. So reason is, here seller may not know any other information about the subject matter to be insured, but the buyer or the insured will be having each and every information about the subject matter. So in this background, each and every information has to be disclosed to the insurer perfectly without any misinterpretation or non-disclosure of information. Okay, fine. So how to disclose the information? What kind of information has to be disclosed? Only the material fact. What are material fact? The fact which will influence the insurer's decision. Okay, got it? Influence the insurance decision. What kind of decisions? It was to accept the proposal or reject the proposal. So whatever the information will influence the insurer's decision in order to decide what should be the sum assured, what should be the term, and what mode of premium should be given. So in this background, utmost good faith should be there from the insured itself. Okay, got it? So another thing is, even when come to general insurance, life insurance is another element. General insurance, so where insurer can inspect the property subject matter, it may be bike, he can inspect, every information will be there, but that insurer may not know what are the past facts regarding the past facts or history about the subject matter. In that background, insured must give each and every information to the insurer to give clear picture about the subject matter. So that matter, so insurer can go for medical examination, he can go for personal verification of the property. Okay, so all these aspects will give idea about the subject matter, but still insured what information gives, that will be the base for take the decision. So what mode of method insured can give the information? One is proposal. Proposal gives each and every basic information regarding the subject matter. It may be regarding if it is life insurance, it may be regarding the individual's age, it may be the family history, it may be health history, it may be occupation, it may be income and education background. And all this information will be included in the proposal. That gives brief idea. If any doubts arises there, then again insurer asks for further classification or submission of additional data for the to take the decision. So in this background, I can say insurance is playing very significant role in the economic development and social welfare. That issue I'll discuss in the next session. But here insurance is playing very significant role to create peace of mind with the individual, as well as peace of mind as well as confidence among the business people. Thank you very much.